one of the things that you can do. So I'll give you two examples. So there's the Block One guys, right? They did a big ICO and they raised a bunch of money and they started a protocol and it went up and they took all the money and they bought Bitcoin and the protocol died and it's gone and they're super rich and super happy and, doing all kinds of fun stuff. No, that's not what was supposed to happen. You were supposed to develop the protocol with all that money that people gave you.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Mark Yusko dives into U.S. banks embracing Bitcoin XRP, stablecoins, and crypto regulation. Don't miss what's coming next.
I said I don't love the fact that all the money went into the Ripple or the XRP Foundation. However, buying real businesses, right? If you can argue a foundation full of money isn't a business per se, right? I mean, it has some functionality of providing liquidity to a market, but that's not really a business. But acquiring a prime brokerage firm, acquiring distribution, acquiring other things, that's real. So if there's buy or build, right? You could build it organically. You could hire a bunch of engineers and build it, okay, like what Jack Dorsey did with Twitter, or you could buy it and kind of build it, cobble it together. So I said, I watch what's happening in that Ripple ecosystem, and I like when they make good moves, and I don't like when they sell the liquidity from the foundation to the masses. I kind of don't like that. But the vision is good. The ideas are good. And the hard part for me, because I'm not an engineer, flunked out of that a long time ago. I deal with engineers and I fund engineers, but I'm not an engineer. So I'm not technically competent enough to say, oh, this thing with the XRP ledger is wrong, and this thing with the Bitcoin ledger is right, and this thing with the Ethereum ledger is wrong, and this thing with the Solana ledger is right. I can observe when Solana goes down. That's less than positive, right? I can observe when a stablecoin gets launched on XRP through one of our portfolio companies stably. That's real. I can observe that USDC and Tether are dominant franchises and Paxos is coming up. And so I can observe those things and I can kind of intuit why they might be better. So all that said, I do think we're all fighting, right? This is interesting. All these communities, right? Sometimes they think of them as warring factions. No, we're all kind of common and united against the same enemy. And the enemy is the entrenched masses. I don't know if we've talked about this in the past, but there's a cool show. I think it was Apple TV maybe, called Mr. Robot.
At the Bitcoin 2025 conference in Las Vegas, BlackRock made waves again. Robert Mitchnick, head of digital assets at the $11 trillion asset management giant, stood firm on a clear message. Bitcoin deserves a spot in your portfolio. Specifically, BlackRock recommends wealth managers consider allocating 1 to 2% of client portfolios to Bitcoin. While that might seem small, coming from the world's largest asset manager, it carries enormous weight. This recommendation isn't a reaction to headlines or price swings. Mitchnick stressed that it stems from years of in-depth analysis, dating back to internal model portfolios released in December 2024. The reasoning? Bitcoin offers unique potential as a global monetary alternative and a hedge against inflation, geopolitical instability, or loose monetary policy, scenarios that many investors worry about today. BlackRock isn't treating Bitcoin like a risky tech stock or a get-rich-quick play. Instead, it's placing BTC in the same category as commodities or private equity, alternative assets that can improve long-term portfolio performance. Michnik highlighted how financial advisors now use BlackRock's model portfolios as critical tools to build balanced, diversified investments for both everyday investors and the ultra-wealthy. With Bitcoin officially on the menu, it's clear. This asset is no longer fringe. It's going institutional.
I would say if I had watched it in real time, I'd be much wealthier today. But I didn't watch it in real time. And the reason I say that is because it was a perfect story with a lot of gratuitous violence and sex and drugs. But so I didn't love all of it, but I love the actor. Remy was amazing. But the story of Evil Corp, which is clearly JP Morgan, and the technological kind of attack on that, which is Bitcoin and other chains, is real. And so, when JP Morgan says they're going to have JP Morgan coin, that's the evil coin in the show. But now they're saying, well, fine, you don't have to use that. You can buy Bitcoin. Jamie Dimon's like, I still think it's like smoking and you shouldn't do it, but he's such a dork. But now they're talking about, well, maybe we should collaborate together and use XRP. Now, we've talked about this in the past, that I definitely think that there are two approaches to liberating that $7 trillion of friction, right? One is you can arm the current combatants, the incumbents, with new technology to replace the old. That's definitely what Brad and XRP are trying to do. The other is to blow them away and just create something new and migrate everybody there. And that's what most of the other stuff is doing. So there is a little bit of factions that way. And I would put Cardano kind of over here with the XRP. They're trying to help the banks and the current institutions migrate toward that greater future. And we can talk about this. There's TradFi, right? Traditional financial services. Then there's DeFi, this digital future that we all want. There's an interim step called CeFi, centralized finance, which has elements of digital, but elements of trad. And that's probably the more likely path, particularly for people who aren't tech savvy.
At Bitcoin 2025 in Las Vegas, David Sachs, President Trump's crypto czar, laid out bold plans to grow the U.S. strategic Bitcoin reserve. During a fireside chat with Gemini co-founders Cameron and Tyler Winklevoss, Sachs explained how the government could acquire more Bitcoin without costing taxpayers a dime. He pointed to creative, budget-neutral strategies like using surpluses from existing programs or reallocating funds from the Treasury's Exchange Stabilization Fund or IMF-issued special drawing rights. The reserve already holds around 200,000 BTC, roughly $22 billion, seized from criminal cases. But the Trump administration wants more. According to Sachs, both the Commerce and Treasury departments have the green light to purchase additional Bitcoin if they can do it without raising debt or taxes. The key now, he said, is convincing officials like Treasury Secretary Scott Bessent or Commerce Secretary Howard Lutnick to move forward. Sachs also revealed the administration's wider crypto agenda is rapidly advancing. From banning central bank digital currencies to rolling back restrictive IRS and DOJ policies, Trump's first 100 days have radically reshaped the crypto landscape. With a goal to complete the core agenda by August, including the passage of key bills, Sachs is optimistic. He sees the U.S. not just holding Bitcoin, but leading the global race in mining and digital asset innovation. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.